Thank you all for joining us today for our first installment of the Sikich business briefing on the coronavirus crisis. Thank you for all of you that tried to dial in this morning. Given the overwhelming response, we successfully crashed the webinar platform used for today's broadcast. So this session is now being recorded, and we'll use your questions you submitted to facilitate the Q&A function. These updates are as of March 27th, 2020. My name is Jerry Murphy, and I'm a partner in the Chicago office that leads the manufacturing distribution industry team at Sikich. I'll be today's moderator for our business briefing. I'd like to start by expressing our heartfelt sympathy to all those impacted by the virus. Our gratitude goes out to the first responders and healthcare workers on the front lines, as well as those serving retail customers. We're grateful to our neighboring industries and businesses who are demonstrating extraordinary leadership as they execute their continuity plans. As all of us adjust to this new reality, our number one priority at Sikich has been and will continue to be the well-being and safety of our employees, their families, our clients, and the communities we serve. We're committed to bringing you insights and information as quickly as we can and be hosting this weekly briefing style webinar to address your challenges and answer your questions. We've also developed an extensive coronavirus resource center that can be found at our website, which is www.sikich.com. This resource hub contains articles, news alerts, communications, and will house upcoming events as well as our recorded webinars. So we please ask you that you'll leverage this site and check back frequently for all the updates that we'll provide. Before we dive in, there's just a couple of housekeeping items I want to go over. We've obviously had a tremendous amount of interest in this topic and reached the capacity of our webinar platform today. So we'll continue to provide this as a recorded on-demand webinar. We also had a significant number of respondents and participants that are from a wide range of industries, from government to not-for-profit to manufacturing. We'll try to cover all of the issues that you might be facing during today's webcast. Thank you for those who have submitted questions. We'll use those questions that you submitted prior to today's webcast for our Q&A. Now I'd like to introduce you to our panel and the topics we'll discuss today. With me, I have Jim Brandenburg. Jim's a partner in our Milwaukee office and is the resident expert in our firm on everything surrounding tax legislation. Jim's been following every move of the stimulus package around the clock. We also have Jenny Andrews. Jenny is a Managing Director in our Human Capital Management and Payroll Consulting practice, and Jenny's been closely monitoring what the Department of Labor is doing around the Families First Act. Finally, we have Tom Baer and Ray Lampner, who are both partners in our advisory services group, who have worked extensively to understand what the Small Business Administration is doing and how it might impact your organization. With that, I'd like to turn it over to Jim for an update on the stimulus package. Jim?
Thank you, Jerry, and thank you all for joining us today. As Jerry mentioned, I will be covering the tax provisions in this CARES Act, which is the Coronavirus Aid, Relief, and Economic Security Act. A brief background on this bill. This CARES Act is also referred to as Phase 3, as it is the third piece of legislation from Congress this month dealing with the coronavirus situation. The bill was introduced last Thursday and passed the Senate here on Wednesday after much drama. It's now awaiting a final vote in the House before moving to the President. Again, that should be happening today as we're doing this session today. They'll be doing the final vote in the House. This CARES legislation is designed as an economic stimulus package to aid workers, families, businesses, and other organizations impacted by the coronavirus. It also assists healthcare providers dealing with this pandemic. This is a massive bill, over $2 trillion in this bill. In fact, it's the largest rescue package in US history. And it's about 20 times the size of the Phase 2 package, which was just passed last week. One of the main goals of the CARES Act is to have an immediate impact on the economy that's been hampered by the coronavirus. Congress wanted to provide a cash infusion to the economy for individual workers, families, and business. They plan to offer liquidity and working capital for the businesses to help them over the next several months. There are several significant tax provisions in this legislation, but this is not just a tax bill. There are many other aspects of the CARES bill, and tax represents about 30% of the overall funding in this bill. The tax provisions are all favorable. Again, they're designed to get cash moving in the economy and to the workers and businesses. So let's look now at the individual provisions that are in the bill. The first item that you've all heard about and seen is the attention that's drawn to the individual rebate checks. So let's go through a brief overview of these. Individuals are eligible for a rebate of $1,200 and up to $2,400 for a married couple filing jointly, plus $500 per qualifying child. Now, this rebate is available for individuals with adjusted gross income, or AGI, of $75,000, and then for married couples up to $150,000. This credit then is reduced or phased out for taxpayers with AGI above those thresholds. The rebate is even available for those individuals that have no income. There are several other provisions and exceptions in this program, but the plan is for the IRS to process these rebates and issue checks to individuals over the next several weeks. The idea is that no action will be needed by taxpayers in order to obtain their check. The IRS will use the individual's 2009 tax return, or if they haven't filed 2019, they'll use the 2018 tax return to assist them in gathering the information to issue these rebate checks. The IRS website will offer guidance soon to assist on those rebates. So again, be watching for those soon. The next item we'll look at is some retirement accounts. Again, some individuals impacted by this coronavirus may find themselves in financial difficulty and therefore may look to draw on their retirement accounts for funds. As has been done with other disasters, this CARES allows individuals to avoid the 10% penalty tax for early distributions from their retirement accounts. In addition, the amount is spread into income over a 3-year period. These distributions are limited to $100,000. Finally, individuals may be permitted to borrow up to $100,000 from the retirement account, and there are several repayment options. Another one that was added was relief for required minimum distributions, or RMD rules, for those aged 70 and a half and over. This provision removes from 2020 the required distribution that they would need to take for certain retirement plans, including IRAs. This relief may assist some taxpayers during this downturn. Next item is charitable contributions. This CARES legislation will permit individuals in 2020 to deduct up to $300 for donations to charitable organizations. This is available for non-itemizers. In addition, the 50% of AGI limitation for charitable contribution is removed for 2020. And last, for corporations, the taxable income limit is raised to 25% for 2020. One other item that was put on here was for employers making payments on student loans. These payments by employers in 2020 can be deducted by the company and be excluded from income for the individual employee. Again, we'll need to get some guidance on this program here from the IRS once this is enacted. Next, I'd like to move to some of the business incentives in the CARES Act. Again, the goal of this legislation is to get the funding and income out to businesses as well as individuals. And again, that's what occurs here with these business items. First is this employee retention credit. Again, this is a new provision that would be a payroll tax credit of 50% of wages paid to employees during this coronavirus crisis. The credit is based on the wages paid to employees and covers the first $10,000 of their compensation, including any health benefits. Retention credit is available to employers that had their operations partially or fully suspended by the coronavirus shutdown or experienced a drop of 50% or more in their gross receipts compared to the previous year. For employers with over 100 employees, qualified wages paid to employees when they're not providing services described above, again, for companies that are partially or fully suspended or had more than a 50% drop in revenue. For employers with less than 100 employees, however, all employee wages qualify for the credit, whether the employer is open for business or subject to a shutdown order. Next, the same credit is available for tax-exempt organizations. They'll need to have been impacted by the shutdown, but they can also qualify for this again because this is a payroll tax credit. And this credit is provided for wages paid or incurred from March 13th, 2020 through December 31st, 2020. And again, we'll need to get some guidance from the IRS on this employee retention credit. Next is another one is the deferral of payroll taxes. What the legislation would provide is incentives for employers as well as self-employed individuals to defer the payment of their employer share of the FICA tax on the employee wages. Again, employers pay the 6.2% FICA tax on the employee wages. What this would do is apply for payroll taxes from now, the date of enactment of the bill, through December 31st, 2020. And the provision allows companies then to, on this deferred payroll tax, to defer it. One half of that deferred payroll tax would be due December 31st, 2021, and the other 50% would be due December 31st, 2022. Okay, so that's the deferral of payroll taxes. Next item deals with net operating losses, or NOLs. This CARES legislation softens the impact of NOLs that were changed in the recent tax reform legislation. First, the provision removes the 80% of taxable income limit that was imposed. Further, any net operating losses incurred in 2018, 19, or 2020 can be carried back 5 years to obtain a refund of prior year tax liabilities. And this could be a real boost for businesses struggling from the impact of the coronavirus. And again, this would be available for individuals or businesses. Next, there was a change for a limitation for large losses that also came about with the recent tax reform bill. And what this CARES legislation would do is there had been a limit of $500,000 for these losses that individuals had. It would remove that limitation for the years 2018, 19, and 20. So this will allow individuals that generate large losses to obtain tax savings by fully deducting these losses. Next item is an enhanced deductibility of business interest expense. This change increases the amount of interest expense businesses are able to deduct by raising a 30% limit to 50% of adjusted taxable income. Now, please note this applies for the 2019 and 2020 years. This higher deduction level could assist businesses when deducting any business interest expense that they incur during these trying times. And the last item I have on here is I put the fix for the glitch that was from the Tax Cut and Jobs Act related to qualified improvement property, or QIP. This special CARES provision allows businesses to use 100% bonus depreciation for costs related to improving their facilities. The change remedies this drafting error that was in the Tax Cut and Jobs Act and could provide a large savings for any companies or businesses that had this QIP that they incurred that. These costs can be written off in 1 year instead of over a 39-year life. And this applies for additions back to 2018, 2019. So it may result in filing amended returns to obtain some of the refunds from this change. So again, this is an item the company's been looking for a number of years, and this bill would take care of that. So that's it, Jerry, as far as an overview of the tax changes for both businesses and individuals.
Thank you for that, Jim. We appreciate the update on a very large bill and a great summary about the stimulus legislation as well as individual and business incentives. I know many organizations have been very interested in the deferral of payroll taxes, and one of the common themes that we've had related to that topic has been questions from employers about the retention credit. A specific question that we're getting is, for employee retention credits available to employers, how did the larger companies with over 100 employees qualify for this credit?
Good question, Jerry. With that, what they need to have done is they needed to have been impacted by a government shutdown, which again is growing, and either be shut down partially or fully, or to have had a drop of 50% or more in their gross receipts to the business. So if they've had that situation, they can be entitled to this, but they need to continue to pay their employees during this. So if they're in that situation where they either have a shutdown or have lost 50% of their revenue, but they continue to retain and pay their employees for really, in this case, not working, then they're able to to get this credit if they're a larger employer, over 100 employees. Again, that will be one that the IRS is going to have to issue some guidance on relatively soon to help both larger and smaller businesses, because this is a payroll credit that they can apply on their payroll credits from now to the end of the year. So they'll need to have that guidance and information pretty soon to make sure that both large and small employers know how this credit works for them. And there's even a part with that, as I mentioned, Jerry, that even tax exempt organizations could qualify for.
Thank you, Jim. We'll turn back to you during our Q&A session in a little bit. Let's now turn it over to Jenny Andrews.
Thank you, Jerry. This morning, I'll review and discuss the latest updates on the Family First Coronavirus Response Act. We'll do a quick recap of the paid sick leave and the paid FMLA benefits that came out of that act. I'll provide some employer notification requirements, and we'll discuss what else is new and happening along with other important updates. So for a quick recap, we have the Emergency Paid Sick Leave and the Emergency FMLA Act, which is effective as of August 1st, which that date has changed. And it covers, it covers private employers as well as public employers, but the private employers, it's for under 500. And I've quickly outlined the differences between the two, and the most important items that you need to look at is that under the Emergency Paid Sick Leave Act, there are 6 conditions of which they must qualify to get the paid sick leave benefit. And then under the Emergency Family Medical Leave, there is 1 condition, and that 1 condition is for the child care, for a school being closed or the daycare being closed. There are conditions which for daily and caps for the entire benefits, and they are both refundable tax credits equal to 100% for private employers only. Okay, so some of the updates that we have been given, one of them was the requirement by employers to do notifications, and those notifications come in the form of posters, which we're very familiar with. These are free resources that were put out by the Department of Labor, and they were published on March 25th. And there is one poster for non-federal and federal employees, and then there's also a document for frequently asked questions related to those, of who needs to receive them, when they need to be posted, and where. So let's talk about what's new. So recently, on March 24th, the United States Department of Labor released their first question and answers document on the coronavirus and the First Families Coronavirus Relief Act. And one of the big things that they changed on there was the effective date. So it was moved from April 2nd to April 1st. And they also provided clarification on a lot of different topics that people were asking questions on. The first one, they clarified how to determine the 500 employee headcount. That had a lot of questions deriving out of that, and if it was based on U.S. employees, and how to look at that calculation, how to calculate the part-time hours pay, and clarification on how the calculation of regular pay, what is involved in that, and if it includes overtime. They also provided confirmation that the First Family Coronavirus Relief Act will not be retroactive. So any time that was missed prior to April 1st would not be covered by this act. That would just be something that the employer is going to have to pay, and they would not be able to get tax credit. if that was an extra benefit that as an employer you provided your employees, or you could have the employee use their any accumulated paid time off. And then as of April 1st, that would kick in. The most important feature of this is to remember that an employee has to be actively on the payroll at the time of using the benefit, which would be April 1st or after. Okay, they did touch on the small business exemption that many have been asking about. Small businesses with fewer than 500 employees will have the option to request an exemption. However, they have no additional information available at this time as to how you would go about doing that exemption. So they're asking that you do not send any letters to the Department of Labor at this point and wait for further instructions from them. And then there was also some rule clarifications, many questions on how the different acts interface with one another, clarification that an employee can only take 80 hours total for the paid sick leave portion, that they cannot take 80 hours for their own illness and then 80 hours to care for a family member or for daycare. They also explained under the FMLA portion that this does not change the rules for the standard FMLA Act that was issued in 1993. So for an example, if an employee is out sick due to the COVID-19, they could be eligible for the standard FMLA benefit and use the emergency paid sick leave to pay for their first 2 weeks out. And that would be for somebody that, for a company that is under 500 employees. For those that are over 500, you would still follow your standard FMLA guidelines. So even though you don't have those benefits available to your employees under the First Family Act, you could still offer the FMLA guidelines. So another example would be if somebody is missing work due to childcare, that would not be covered under any FMLA, the standard FMLA, if you are a company that is over 500 or under 500. That would only be covered for companies that are under 500 employees under the Emergency Family Medical Leave Act. And the question has been asked by many of the companies that have over 500, if I have an employee that needs to take off because of the schools being closed, how do we account for that? And one recommendation is that the employee would have to take a personal leave of absence, or they would have to be able to use any of their accrued time off. Okay. So some other important updates to human resources due to the COVID-19 is we had on March 20th, the Department of Homeland Security announced that it is relaxing the requirements for completing the I-9 documents during this public health crisis. Due to the stay-at-home orders in place, employers will not be required to review the employee's physical documents to complete Section 2 of the form. However, this is only for a short period. So once operations have returned to normal and people are able to leave their homes and return to work, the employer will be responsible for following up with those employees and viewing the actual documents and then updating the I-9 form to show that they did view the physical documentation. Under OSHA reporting, there was a reminder from OSHA that the COVID-19 still falls and may fall under an OSHA obligation. The employers are required under OSHA to record any work-related illnesses or injuries. More explicitly, we'd want to take a look at only confirmed cases of COVID-19 should be reported. However, you will need to assess whether the confirmed case was work-related as defined under the rules. Keep in mind that the type of work, risk of the person, the risk of the person-to-person transmission, the environment, etc. Did that cause their exposure? And also, if you have any employees that took off work because they were exposed and that results in a death, that also has to be reported under your OSHA reporting. With the National Guard now being called up to deal with the coronavirus in many states, for example, in New York, where they're building the hospitals, in the convention center, the temporary housing. So it's important to remind everyone to review your employer responsibilities under the Uniform Services Employment and Reemployment Act, should any of your employees be called to duty to serve under the corona epidemic. There is also some other leave laws and agreements that I want to remind everyone that whether the company is covered by the First Family Coronavirus Response Act, Relief Act, apologies, employers should still comply with other federal, state, and local leave laws to which they are subject, as well as any collective bargaining agreements. So this new act doesn't supersede or preempt any other law. All other laws still apply. So keep that in mind. If you have an employee, whether you have under 500 or over 500 employees, and the employee is sick or a family member is sick and they must miss work for that, that could fall under the standard Family Medical Leave Act, if that is applicable. So you would need to have the two acts work together. So you would have to look at the benefits of the state, local, federal, and see what is in the employee's best favor. So, for example, New York State has just implemented their own version of the Coronavirus Relief Act. So you would need to, if you have employees in New York, you would have to look at that act and look at the federal act to see what is more in the employee's favor. Now, with New York State, they have completely different limitations. Their limitations as far as what employers or the number of employees that are eligible has been removed. So it's not capped at 500, and there's different stages of 0 to say 20 and then up to 100 that require different plans of action. So that if you're in New York, you would have to take a look at that. You would also want to monitor your own state to see if there's any other paid sick leave requirements or local laws, such as in Chicago with the paid sick leave. Let's see here. And then we just, as a quick reminder, again, just make sure that you're looking at any of your collective bargaining agreements. Are there any stipulations in there that require additional benefits or guarantee of position, so that you're making sure that you're keeping all of the laws and the regulations straight when you're making each individual decision, but most importantly, that you are consistent in the decision-making process so that there is not any claims or open to claims for discrimination. Jerry, that's all the updates I have here.
Thank you, Jenny. I appreciate a great summary there of the Act, including the sick leave and FMLA provisions. We've had a number of attendees that had submitted questions prior to this morning's recording, and a common question that keeps coming up is with respect to the paid time off. And that specific question is, can I require an employee to use paid time off to supplement the benefit under the Act? For example, the 2/3 pay.
Okay, great question, Jerry. Yes, I've also heard this referred to as like topping off their salary. And yes, for example, under the emergency paid sick leave provision, where if I'm taking off for daycare, I would only get paid 2/3 of my pay up to a cap of 500 or 200 a day. So under this, my employer could require me to use any accrued paid time off that I have to supplement my pay. So even though I'm already getting paid, they could have me use additional paid time off to bring my payment whole. So that is definitely something that is up to the employer and at their discretion.
Thank you, Jenny. Appreciate that response. We'll get back to you. We've got a lot of other questions for you in the Q&A session. Let's now move on to Ray, who will give us an update on what the stimulus package means from an SBA perspective.
All right, great.
Ray?
Thank you, Jerry. Just to follow up, so this section is going to be split between Tom Baer and myself, because there's actually two separate loans that are available right now. Well, one's available, one hopefully will be available in the next couple days. The first one is the disaster loan I'm going to speak about, and then the other one that Tom's going to speak about is called the Paycheck Protection Program, which recently was being called a small business interruption loan. And so that's the one that actually has the forgiveness feature, and I know a lot of people are going to be interested in that. But we also do have the disaster loan that's actually out, and you could actually apply for it now if you wanted to. And this one's, it's a little bit different. This was a program that was in existence with the SBA already. It was just, when it was declared a disaster, the pandemic was declared a disaster, this allowed this vehicle to be used for this purpose. And also when it first came out that the whole country wasn't declared for the disaster, but since then the whole country has been. So anybody that's eligible in any part of the country could apply for this. So one thing that's a little bit different from this is that you actually apply directly with the SBA. And you'll see down a little bit lower, I have the website in order to do that. And so you don't work directly with your banker during this process, but we definitely suggest that you keep them informed. You ask them how they're going to be impacting your current facilities. At the same time, when you're having those conversations, you should be asking your bank, what can you do for me on my other loans? Also, you have to be able to point that somehow you've been affected by the virus, which I think for most companies, that's not going to be much of an issue there. But what they did come out and say is that it can't be used for expansion. So if you're a growing business and you're looking for that, can't do that. You're really looking for this just to be for working capital you need in order to get through the pandemic. It can't be for other loan consolidation. So not looking for refinancing other debt because it's cheaper. Now there's no cost to apply when you go through it. And the goal overall for the SBA on these disaster loans is to get it done in 2 to 3 weeks. But obviously the amount of loans that are going through, they're having trouble meeting that time frame. They're not exactly sure what it is right now. I actually sat on a presentation by the SBA yesterday, and the person giving the presentation said, they historically have gotten, here's our pipeline, the number of loans that we're working for, in the queue, the ones that are waiting for to be approved, kind of those types of things. They've actually stopped putting that out. So they're not even keeping track of it. I think they're keeping track of it, but it's probably just overwhelming. But it is actually, it's a fluid process. Things are changing. It wasn't set up to handle this loan volume. So they're actually changing things on a regular basis. And they had said that, don't be surprised if you go in to do the loan application one day and then go in the next day and see the question you're trying to figure out isn't there anymore. So it sounds like it's not that hard of a process to kind of walk through it. But again, you're gonna have all your information ready to go through. They did say once the loan is completed, you'll get your cash typically in 3 to 5 days. If the loan's over $25,000, they will give you your first $25,000 right away. And the amounts above that, they'll need security behind it. And so they have to put liens, so they have to wait for that to happen, but they think that normally takes like 3 to 5 days. They also look at your ability to repay. So if you weren't able to get a loan before because of the performance of the business, this may not be the vehicle you're going to use to do that. They do check your credit, but there is not a floor. So if you have past bankruptcies or you have not Optimal credit is still maybe an option for you, but again, they check it, but it's not necessarily a game stopper. The size limit that they put out there is 500 employees, but it's not like a steadfast rule. There is rules. They actually have a website called at sba.gov/size. That's sba.gov/size. So there's several. 500 is probably the most typical number. There's a few that are below that, but those are typically smaller businesses. But there's quite a few that are larger than that too. So if you feel that 500 is going to be an issue, you can go to that website and see. As I mentioned before, proceeds need to be used for working capital. So it's a little bit different. Normally when I work with clients that are looking to get financing, we kind of put projections together. You know, for this is how much you need to borrow, this is how you're going to repay it, which I think is still something you need to do. What's a little bit different is the SBA is actually the one that's going to determine how much you can borrow. So they're not going to be looking for that when you give it to them, and there's really no place to put it in the application. But I definitely suggest there is a note section in there that you would include that, anything, and have justification for what you want to borrow. Now, when they come back with the package they're going to offer, doesn't mean you can't try to negotiate at that point, but again, you know, just trying to streamline the process and cut back on the back and forth. There is an advance payment of $10,000 with the application, and they are saying that that is once they give that to you, if you get denied, they're not going to ask the money back. And one thing that did come out with this loan, if you've already applied for this or getting money out of it, if you decide to later on want to use the Paycheck Protection loan, you can actually use that to refinance this. The loan size is up to $2 million, 3.75% interest. It's actually 2.75% for nonprofits. And it's up to 30-year amortization. I'm not sure how many people, how many companies actually get the 30-year amortization, but that is what it's up to. And again, they're the ones that feel that they're going to be making that decision. There's an 11-month deferral on payments. That starts from the time that you actually receive the cash from the investment, but interest starts right away. So there is interest during that time period. There was originally the way this was set up is they were saying if you had existing credit, they would take that into consideration, and that could decrease the amount of money you were getting from the disaster loan. And so we had some clients that were looking to borrow against their lines of credits and stuff like that to get rid of some of that available credit. But in the meantime, they've gotten rid of that. So you do not need to worry about that anymore. You can be, if it's a new business and you don't have a lot of history, you can still use this vehicle. They have specifically said ESOPs are included. Nonprofits, self-employed, cooperative, and business concerns, and also landlords. So this is, since the loan that Tom's going to talk about is based on payroll. So if you don't have payroll, which a lot of landlords won't, this is a good vehicle to use, especially if you're expecting to have some tenants, either retail or residential or whatever, that aren't going to be making payments. You can definitely take this into consideration and use that. And one thing too is if you're not thinking that you're going to have any damage or haven't had any to this point that you can point to, we suggest you put projections together showing that that's going to happen when you're going through this process. For the nonprofits, to show that they're looking for the ones that they were willing to lend to, what they're looking for is an effective letter ruling from the IRS granting exemption under 501c, D, or E. And they're also looking for, or one or the other, not both, evidence from the state that the non-revenue producing organization or entity is a nonprofit organized or doing business under state laws. And one thing I will say is that is the current guidance in order to do that. And it may be subject to change. Excluded entities, they aren't looking for this, are going to be the agricultural enterprises, religious organizations, charitable organizations, gambling concerns, and that's for a company that 1/3 of revenue comes from gambling, casinos and racetracks, and real estate developers. The application process going through is, again, changing daily. I remember I actually put this slide together on Wednesday and I clicked to see if this link would work. It did take us straight to the website, but it was under construction. It was having maintenance done, and so hopefully some of the maintenance was making it work a little faster. What we're hearing is it's running very slow. They're suggesting or crashing. I've heard several people say that it crashed on them. So what they're suggesting is you do it in the off hours or on the weekend or something like that, when the traffic's a little bit less. They're also saying as far as the application process that if you're not sure and you don't know, that the comment was, just go ahead and apply. Let us figure it out when you go through this, and then we can go through that. But he also said in the process, and the next slide is going to have this, is just making sure you have all your information. The biggest slowdown on these loans is not having all the information ready. And another thing they pointed out is when you put your information in here, you need to use a physical address. Things like PO boxes and stuff like that aren't going to work, and it's going to kick your application out. So just make sure that you are using a physical address. And then also there's asterisks in there suggesting required information. So just make sure all that is included when you're filling it out. And I think lastly is the idea of just being patient when you go through this. These banks are going to be completely overwhelmed. The amount of loan stimulus that we're talking about is about 10 times what the SBA normally does on a given year. And we're talking about trying to do that in a couple of months. And so you're going to see a lot of people working on this that aren't SBA people in the past. The banks are hiring people to help with this. But I think anybody as a business owner can just say that, if you try to throw 10 times your business through your current infrastructure, it's just not going to work. So you just have to be patient with that. We'll go to the next slide. Okay, so here's some of the stuff you want to get ready before you go ahead and apply. So the business loan application, that's actually what you do online. They're going to want an IRS form 4506T, and that's basically just saying that they're going to go and confirm that the tax returns you give them are the appropriate filed returns. Federal income tax returns, and then including all schedules, and that's going to be for the company and the individual. Now, one thing is, if you don't have 2019 done, don't worry about it. Just include your 2018 returns. That is not going to hold up this process. Personal financial statements, go through, they have their own form, but again, that's something you're going to fill out online. Listing of all fixed debts, so what's your existing debt that you have on the company. Year-to-date profit and loss. So I would go back to that, is if you did not have your 2019 returns done, I would do that for 2019, or at least the last fiscal year end, and then also include that for for year-to-date 2020, and then the monthly sales figures. That's one thing that they look at as far as how they determine the amount of money that's going to be borrowed. So I am going to go ahead and turn it over to Tom, and Tom's going to talk about the Paycheck Protection Program.
Thank you, Ray. Just got a couple slides here, and then we'll go to questions. So the Paycheck Protection Program, we've been tracking the bill. Jim has been tracking the tax provisions, and several of us have been tracking other provisions. And so this portion of the bill has evolved. Ray just got done talking about the Disaster Loan Program. EIDL stands for Economic Injury Disaster Loan that Ray covered. Initially, you could not have both loans, and as Ray mentioned in his remarks, the disaster loan has now found its way into this bill, and some of the requirements that were normally there for a borrower have been lifted, and that's a result of this bill. So for the time being, and by the way, the current status of legislation, I just saw on the news that one of the representatives may not allow for a unanimous consent vote. So Jim's going to go down in the bunker probably and monitor that progress again. But the eligibility for this loan, let's talk about that, and then I'm going to talk about just the loan terms and then the loan forgiveness provision. Okay, this loan program has been referred to in the Wall Street Journal as a grant. I often refer to it as an equity infusion for small business, and I think both of those are fairly accurate characterizations. So eligibility, this is under 7A, and 7A, traditionally when we see 7A loans, a lot of times it's around a business purchase where there isn't enough collateral, and so the lender goes to the SBA to get an SBA guarantee on a loan that they give to someone maybe buying a business. That's most commonly where I see it. The employee count that we see on the slide, less than 500 employees, this is a general rule. Ray mentioned earlier that if you go out to the SBA website and you look at business size, there is some discretion given to the SBA administrator. So you will find certain industries that number count is higher. And they actually wrote into the bill that for the NAICS code 72, which is travel and hotels and restaurants, that provision is actually on a per location basis. So that 500 is per location. Okay, so and then franchisees are also included in that. So so they're trying to carve out for that particular NAICS code an exception. Okay, so who qualifies under 500? Businesses, nonprofits, veteran organizations, and tribal businesses. Okay, and you had to be in business as of February 15th. You had to have employees that you were paying salaries and payroll taxes on. Self-employed are eligible for this. Okay, self-employeds are eligible for this. And a couple other points there. You'll see that you, as a borrower, you can have access to other credit and apply for this loan. So it doesn't have to be sort of your credit of last resort. And that's consistent with what Ray mentioned on the disaster loan. The borrower has to certify that they face economic uncertainty, okay? And they also have to represent and certify that their intention of using the funds is going to be for qualifying purposes. And I'll cover that here in a minute. But the other thing I will mention is there are affiliate rules out there related to owners and control, and those are waived. And for now, there's not a lot of details on if a business is owned, for example, or controlled by a venture capital firm, whether or not that business is subject to those rules or not. So I think the regulations will give us some clarity on that. The next slide I'd like to talk about are the terms of the loan. So the maximum loan amount mentioned in the bill is basically a formula, and it's the lesser of 2.5 times the average monthly payroll and benefits, okay, for the last 12 months. Okay, so you go back to, if we were to try to get the loan today, we would probably look at March 1 of 2019 through February of 2020 as that trailing 12 months. We would calculate monthly payroll and benefits, and we would take an average, okay? The benefits, there are some specific benefits that are listed in the bill, and those are health insurance, retirement plan benefits, state and federal unemployment benefits. Any employee benefits, I think, are probably eligible. Payroll taxes are not, the employer portion, and that's probably related to the fact that there are some other credits and benefits in this bill for those payroll taxes. Okay. The annualized wages that you can use to calculate that maximum loan amount limited to $100,000 per person annually. Okay. You're not required to have collateral or give a personal guarantee. A maximum interest rate of 4%, and you basically, what it says in the bill is you have to give a good faith estimate of your loan amount. Okay, so this is a calculation. Okay, and you can see that very favorable terms, deferment of first payment for up to 12 months, but a minimum of 6, and then amortization could be up to 10 years. The next slide we're going to talk about is the loan forgiveness. Okay, and this is why it's being referred to as a grant or an equity sort of infusion by the government. Okay, for the next 8 weeks immediately following the loan, you are earning forgiveness from the government on the following expenses: rent, mortgage payments, and that's principal and interest, right, on a mortgage, utilities, interest on other debt like line of credit debt, right, or other non-mortgage debt. Maybe you've got equipment debt where you're paying interest on purchase of equipment, payroll and benefits. All of those payments create loan forgiveness. Okay, so at the end of 8 weeks, we expect the borrowers that qualify for this loan to go to the lender that serviced the loan and provide documentation to support forgiveness. Now, if you think about this, we had 2.5 times of their payroll and benefits that was the maximum loan amount they could borrow. Okay, so really 2.5 months of those expenses, and then the amount we can get forgiven, it's a bigger bucket, right? It's got more categories of expenses that qualify. So conceivably, and we've run this already on a couple clients, you could get your entire principal amount forgiven. Okay, you can't get interest forgiven, but you could get your entire principal amount forgiven, or a portion of it, depending on what expenses are determined to qualify. Now, remember, this is the Paycheck Protection Program. So a couple other provisions: if your employee count decreases or wages decrease for an individual by more than 25%, there's some provisions that it will reduce your forgiveness amount. For example, if you have 10 employees during a period of time in 19, a measurement period, which is about 3 months, they look back and say, how many employees did you have in 19 during the spring? And then let's compare that to this 8-week period. And if the average number of employees is equal to or greater than that measurement period from a year ago, you won't have a decrease. But let's say it's 90%. In other words, you have 9 employees, you're likely to get a 10% decrease in the forgiveness amount. So they want you to keep employees on staff, and they want you to keep their wages the same. Okay, that's part of this bill. You know, I think at the end of the 8 weeks is when there's going to be a lot of scrutiny over the records. There's very specific language in the bill that talks about the lender's responsibility to determine whether the expenses qualify under the loan forgiveness provisions. And lastly, the loan forgiveness does not create taxable income. So in summary, we fielded a lot of questions from clients. What should I do next? What should I do now? When's this going to start, right? So I think it's important for any business at any time, but maybe especially now, to have up-to-date financial information and to understand what the rest of the year is going to look like. So we're recommending get your records prepared, go through a calculation and determine what amounts would qualify for this loan amount. Consider some of these other provisions and whether or not they make sense. Some of these credits and payroll tax deferrals, and I would suspect a lot of them will make sense for you, but some of them may conflict, right? There may be some provisions that we can or can't use because we've decided to take advantage of, for example, this program. Okay, but assess your cash flow needs and determine, what makes the most sense for you, and be prepared. And especially what we've told clients: call your lender and talk to them, and make sure that they know that you're interested in some of these programs, because I think the SBA and these lenders, they're going to be overwhelmed as this unfolds. So with that, I'll turn it back over to Jerry.
I'm sorry, I was on mute there. Tom, thank you. Ray, thank you. I appreciate the summary of eligibility and how to apply for the loan. And we've had a number of questions that came in prior to today's event, and I wanted to ask Ray a question about the loans. A common theme was whether or not employers should lay employees off or try to use the loans for the SBA from the SBA and keep employees on the payroll. Ray, what are your thoughts on that?
Okay. First of all, I'll just say it's obviously a case-by-case scenario, and there's no, black and white as far as what's best. But I can tell you kind of what we're seeing on a couple of different things. When it comes to the disaster loan that I was speaking about, we don't have the formula and there isn't the forgiveness piece. Now, it is meant for retaining employees. They do ask you about those questions and the application process, but it appears there's no mechanism to go back later and see whether that's what happened or not. Now, I'm not encouraging people to not follow that, but it just kind of stating what it looks like now. But obviously, with the loan that Tom was talking about, the paycheck protection, keeping employees is going to allow you to get more of a deferral, not deferral, but forgiveness of the loan amount. But we haven't seen a few clients that have actually laid people off, and then the requirement is you have them back on staff before you actually apply for the loan. Because the measurement period is from 2019 and after loan origination date. So there are some people that are trying to take advantage of that.
Thank you, Ray. Tom, I'll also ask you a question. We talked a little bit about documentation required for application of the disaster loan. A question came in of what documentation will be required to apply for the small business interruption loan? Tom, are you on mute?
It looks like Tom's having some problems with his headset. You just mentioned, so I'll go ahead and I'll take that one. So it's going to be a lot of the similar information that we had talked about on the slide with the disaster loan. Historical tax returns, personal financial statements, and the like. But one thing they're definitely looking for is projections through the rest of the year. They're actually asking for 6 months, but the suggestion is you do it through 9 months. Now this one too is going to be with your banker, so you can have kind of more of an open conversation as far as what they're looking for, and hopefully they're prepping you for it. And as mentioned before, this probably won't be available for applications for a couple of weeks yet, but I definitely suggest you get out in front of your bank and you start asking, what is it you're going to want to see to kind of go through the process.
Thank you, Ray. I appreciate that response. I want to thank today's panel. We've had a lot of great updates in a short amount of time. We've had numerous questions, hundreds actually, come in, and I want to spend a little bit of time answering as many of these questions as we can. I'm going to throw a question back to you, Jim, that came in. The individual says, I see that the federal rebate checks for a married couple are $2,400. Our income is about $160,000. Will we receive a rebate check?
Thanks, Jerry. Good question with it. As I mentioned, there is a phase out. So once your income as a married couple is above $150,000, between $150,000 and $198,000, that credit gets gradually reduced. So if you're at $160,000, your net credit would be about $1,900. So you would still get some, but just a little less because your income is a little higher.
Thank you, Jim. Also on that same topic, individuals have indicated that they may have moved since the last return that they filed and wondered how the IRS will know where to send the rebate check.
Yes, that's an interesting question. Again, it's going to be up to the IRS. They may use, in some cases, they've indicated they're going to use direct deposit with that, and make the deposit directly, even if they have moved. But those are some of the issues that the IRS will be struggling with in the next couple of weeks. They try to get these checks out with it. So again, they are going to have a website page that's going to be directed and have the information on there as they provide more, on these rebate checks.
Thank you, Jim. Let's throw a question out to Jenny. Because of the diverse number of folks that joined our call and submitted questions, there was a question whether or not the tax credit in the Act apply to local governments. Jenny, can you answer that?
Absolutely. Unfortunately, the bill treats private companies and public employers very differently. Both are required to provide the paid sick leave, but only the private sector employers will receive that tax credit to offset the costs. Public sector employees are explicitly prohibited from receiving those same tax breaks.
Okay, thank you, Jenny. Ray, I want to circle back to a point you had made earlier about the loans, and a question came in with respect to the president indicated the new stimulus package will include loan forgiveness. Will this include current SBA loans that a business might have outstanding?
Okay. It's our understanding that it does not, at this point, does not include current SBA loans, but there is something in the bill that does allow for deferral of payments on existing SBA loans. So that's something you definitely want to talk about with your banker. But one thing to keep in mind, this is actually, I had this happen with a client already, and they're trying to kind of dig their way through, is that they went ahead and got the deferral on a current SBA loan. And then after everything was done and filed with the SBA, they came back and said, oh, since you got the deferral, you're not able to apply for either one of the other SBA loans, the disaster or the paycheck protection. So this is kind of getting back to, try to be as patient as possible. I know cash is crunch right now is huge, but just make sure that everybody's dotted all their I's and crossed all their T's in this process. Hopefully they'll get this thing worked around. The overall issue is they're trying to take something and put it through and trying to still look under the old rules when hopefully a lot of these rules are going to get changed, because I don't think the client would have gone that route had they known that they were not going to get another loan.
Thank you, Ray. Tom, I've got a question for you on the topic you presented. We had a question submitted whether or not businesses will be permitted to use both the payroll tax credit and the loan programs. Will organizations be able to use both of those programs?
No, they can't. And, we've had some clients already talk about that. We've ran through some analysis, and what I would suggest is that our initial finding is that the loan program is probably going to be the more lucrative option for most clients. Although I would say at this point it's also new. It's difficult to say, but you won't be able to. I mean, throughout the bill, there's lots of sections where it talks about you can't duplicate, and I mentioned the maximum loan amount that you can apply for doesn't include employer payroll taxes, and that sort of follows that same theme with that. And Jerry, I wanted to mention one other thing. One other question, I know we're getting close here, I get from a lot of clients is about their customers. And Ray mentioned, real estate developer, or not a developer, a real estate investment that has tenants that can no longer pay rent. And that could be a reason that landlord actually goes to get a disaster loan. One of the things I tell business owners and actually real estate owners is talk to your tenants, talk to your customers, make sure they know about these programs, because I think, at least we're the way we see it today, and this is evolving and dynamic and changing quickly, the way we see it is the best option for that tenant, if they're a small restaurant or a service company, is to go and try to get one of these loans, interruption loans, through this paycheck protection program, because that seems to be the best option. But clearly they need to get advice from their advisors and their banker.
Thank you, Tom. I appreciate that. Jim, I wanted to jump back. We had a number of tax questions that came in. A question came in indicating that the individual had not filed their 2019 income tax return yet, will they still get a rebate check if they've not filed the 19 return?
Yes, good question with it, Jerry. Yes, they will still get a rebate. What the IRS or the law mentions is that an IRS will look to the 2019 return for information to do the rebate, but if they haven't filed that yet, they will use the 2018 tax return information to do that rebate. So they should still be able to get a rebate there, again, based on whatever their income was for 2018 then.
Thank you, Jim. As we're getting close to the end of our time, I wanted to throw back one additional question to Jenny. And that question revolves around the number of hours an employer is obligated to pay an employee who works partial weeks because the employer's business is closed. So how many hours is the employer obligated to pay an hourly employee who works a partial week because they are closed, Jenny?
Great question, Jerry. Under the Fair Labor Standard Act, it generally it applies to the hours worked for part-time employees. So it does not require the employer who is unable to provide work to their non-exempt employees that they have to pay them. So they actually only pay them for the hours that they work. Now, on the other hand, if you have exempt employees, those exempt employees would have to be paid their entire full salary for any week in which they perform work. So with the exempt employees, you're not able to reduce their hours or cut them back. If you work a half a day in a week, you have to be paid that full week salary. On the flip side, you've got your hourly who just has to be paid for their actual hours worked. So what we're running into is there's a lot of employers that are saying, I'm having to close down. How do, my exempt employees, can I just make them hourly? You can't. They are full-time salaried, so they are guaranteed their salaried rate for any week in which they work. So one option, if you're looking to cut back, is any exempt employees you have, you could offer them work a week, off a week, work a week, off a week. So you would have to give them time off in a full week section, chunk. There's a couple other ways you can work around it, but the most important part is to remember if you're hourly, you only have to pay them for their actual hours worked, and you are not guaranteeing them any set number of hours. If they're salaried, they are guaranteed that salary for any time that they work within a week. Okay.
Thank you, Jenny.
Mm-hmm.
I appreciate that. We're going to go ahead and wrap things up. I want everyone to know that if you're listening to this webinar, we will be summarizing all the questions that you submitted and posting those responses a bit later. We'll get that out as quickly as we can. We did have a lot of questions that came in through the registration process, so we'll try to answer as many of those as we can as quickly as we can. We want to thank you for your time today. We've been working around the clock with our clients and communities to address their growing needs, and we'll continue to bring you updates on the coronavirus pandemic as it evolves. Our next session next week will likely address cybersecurity concerns, technologies that we're helping our clients implement so that they can work remotely. And we'll probably have additional updates on tax and legislative issues that come up over the next 7 days. As I said, as you can imagine, we're fielding numerous questions on this topic, so please be patient. We're working as quickly as we can to get these questions answered and up on our resource center. So please stay tuned and visit our coronavirus resource center frequently. That's again, www.sikich.com. We'll have more information for you regularly. You can also reach out to today's speakers. Their email addresses were on the slide deck, and you can also submit questions to info@sikich.com. That's info, I-N-F-O, @sikich.com. Look forward to hearing from all of you. Thank you again for your time today, and please be well. Thank you.